Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. This is big. This is historic. What we're living through right now. The first thing I want to look at is the Fed getting hawkish. At a time when there is so much uncertainty and concern, the Federal Reserve is taking a few actions. I'm going to show you what some of the members of the Fed have to say. The second thing I want to talk about is too expensive. Everywhere you go, prices are rising considerably, and this is putting some serious pressure on individuals in the middle class. I'm going to give you some updates that you need to know. The third thing is the major recession signal that is going off, setting off alarm bells everywhere right now. I'll give you that and show you why this is a concern, but could mean positivity for the market in the short term. So let's get into all of that and more right here. Bullard says Fed moving too slowly to quell high inflation and putting economy at risk. He's not the only one to say this, of course, but this is just one. So this is the St. Louis Fed president. We're not talking about some analyst out there. We're not talking about some guy that was interviewed by Bloomberg. This is coming from the St. Louis Fed president. Now, he's on the one end of the spectrum as it relates to the FOMC, but it is still important, okay, to see these quotes and understand that these are central bankers. These are people that are ultimately making these decisions. Let's stick with this level of knowledge anyway. We know what's going on behind the scenes. Quote, the Fed will have to move more quickly to address the situation or risk losing credibility on its inflation target. And remember what was happening 2019, 2020 even. You saw Jerome Powell saying we cannot get to our inflation target. It's so difficult. Therefore, we're willing to push this real hard and we are going to allow it to run hot. You remember that? Inflation was already hot, and you just had to measure it in any different method other than what they use, the core PCE rate, and of course, broadly speaking, the CPI. These are, 7.9%. That's more realistic than it was before, but many measures are 15% and even potentially higher. So I think that what we're worried about right now is the inflation getting out of control and the Federal Reserve not being able to act in time. If they increase rates by 25 basis points, it will take until, who knows, 100 years from now for it to get to a respectable rate. Now, when you look at what has happened over this period, the markets, the financial system, everything is addicted to these super low rates and the Federal Reserve pumping the money in. We'll talk more about that in a second here. But what do you think would happen if we start to reverse? We start to run into some serious issues, don't we? Fed Governor Waller says half-point rate hikes could be needed as inflation is raging. And that connects in with this one. Fed Waller explains more the move to favor less aggressive rate hike at the FOMC meeting. So he explains it here, and essentially you can check out the Wall Street Journal article and all the rest in the description below under the sources. Basically, he said they were going to go for 50 basis points. They were going to go for 0.5%, but Russia came along and derailed that plan. Is it true? I don't know. But understand that they seem to be looking in that direction. They want to get ahead of this, and guess what? They're already way behind. So this is just showing you that they might have to do something that they didn't before. All along, 25 basis points. I said the most likely circumstance would be 25 basis points. The market loved it. You saw that very, very clearly in the days prior. A couple days prior, it started moving up. Even European stocks had moved up even a few days before that. And you just saw the market just loving it. Initially, when the Fed announcement came out, market came down. As soon as Powell started speaking, the market rose up and hasn't stopped over the last few days. There are different reasons for that, of course. But underlying all of that is this positivity that we did not get that extra hawkishness. 25 basis points was the key. And this is more of just, the same sort of thing out of Bloomberg saying, you've got even Neil Kashkari saying we need to get a hold of inflation right now. So you've got people, on either end of the spectrum within the FOMC, within the Federal Reserve, saying we got to act on inflation right now. And what does that mean? Increasing interest rates at a faster pace than what people are used to, as well as reducing the balance sheet. Many believe May is when they will start to reduce their balance sheet. So just a couple months away, we could start to see that $9 trillion pile of garbage start to reduce. What happens with that $9 trillion pile? Well, it has to be because, okay, they can let it mature. They can let things just mature and do it slowly, but they've got $9 trillion worth. And the suggestion here is that they're going to actually have to sell it. That means there has to be a buyer. Who's it going to be? Is China going to buy that all up? Doesn't look like that's the case. Okay, overall, over the last several years, they've been reducing their positions. So we will see. Anyway, it all depends on the fluctuation of the dollar. Are people buying into the dollar now? Are they seeing it as a safe haven? And so on. A lot to think about. Okay, here we can see what's happening with the costs rising. It is getting real bad out there in terms of inflation. You look around everywhere and around to different products, and you see the same thing. Every sector seems to be getting hit by inflation. Sales of U.S. previously owned homes declined to a 6-month low. And look at this. I mean, the price has gone up considerably. Do you think the two could be correlated? Of course. Shoppers reach their limits on some price increases. Efforts to charge more for certain items, from sofas to t-shirts, have met resistance. There was a revolt. And what are they doing instead? Well, you know what they're doing. Shrinkflation. Here, look at this. Coach used fluffier leather for its latest handbag on the right, which costs $100 more than the original on the left. Interesting, right? Well, shoppers, they're not liking it. But see, some of them are able to actually get away with that shrinkflation. I saw it on a random, I don't even know where it was, but I think it was, I don't know, some bit from Good Morning America, or I don't even know, one of these shows. I don't watch the show, I just happened to catch it at that moment. And it was basically talking about shrinkflation, explaining to the public what shrinkflation is, showing the Gatorade bottle and all this. So people are starting to wise up to that, but still, it's more palatable than a price increase. So we will see more of it. Maine governor proposes $850 inflation relief checks. This is the MMT. This is this universal basic income, whatever, theory or whatever you want to call it. This is what's going on right now. Money is going to come from the taxpayer and be sent out to the people. This is a very inefficient way to do it, of course, when you look at how the taxes are spent, but that's what we will see. Argentine president calls for extraordinary inflation measures. This is unbelievable. Argentina, my friends, I know I have some friends in Argentina. Say hello in the comments below. Let me know what's going on. 52% inflation rate. They're going to try this and they're going to try that, but ultimately inflation is probably going to get worse. I was talking about this several years ago, and I remember the comments. There were a couple comments saying, you don't have to worry about inflation here. It's not going to get bad. Here we are today at 52%, but I want to know from the people that are in Argentina, what's going on? Let me know, okay? Let's talk about this. Egg prices right around Easter time. Of course, you've got the bird flu that's happening right now, and that's pushing prices of eggs up. It's pushing everything up. And no matter what, it could be for one reason or another. Notice that. The theme is rising prices. The reason for those rising prices, we're not going to hear about the printing money. I've shown you that. I put that at the front of the video for a reason. The rising prices could be for any number of reasons, according to the media, and the people will never see that first part. That's underlying all of this. If you appreciate this information on the video, hit that thumbs up. I want to thank you for that. Every time you do, you are making a kitten smile. Thank you. Lending Tree survey shows 46% of taxpayers plan to save their refunds. Now that's a good thing. Instead of putting it into their Robinhood accounts and buying up whatever the next hot trend is, you're going to experience higher rates of inflation in the next couple months, and that money might come in handy for some people. This is just a real estate situation. I think I got two related to that. Just showing you the home sales down. Why? Because the prices are up. State governments shedding millions of square feet of office space amid hybrid work revolution. This is ultimately a good thing, saving money on that real estate that continues to go up in price. So I like to see that in a sense. At the same time, the space in which they're in, if it's not being occupied, we got a serious problem with those commercial mortgage-backed securities, with those who own that debt, and so on. What will tame used truck prices? Apparently not even economic slowdown. If you look at what's happening here, economic slowdown across the board, okay? And some things are just seeing prices rise. Even, what do they call it? A lady's best friend? Diamonds. The prices have risen considerably since March 2020. Up until now, it was under 110 and now 140. The peak, at least going back from the financial crisis, was at, I don't know, it's hard to tell here, 175 or so. So we're quickly approaching that moment. So anybody wants a diamond right now, more expensive than ever that we've seen, okay? And then we got to look at this. What I'm about to show you is very important. It is one of the major recession signals. And as I mentioned in the introduction, when you see a yield curve inversion, this generally is positive in the shorter term for stocks. You're seeing that with the 3-year and the 10-year. And by the way, if you're wondering what the heck is a yield curve inversion, hang on a second. You're also seeing that with the 5-year and the 10-year. And you could look at the general direction, okay? The 2 and the 30, the 5 and the 10, the 2 and the 10, whatever. They're all heading in that same direction. What is a yield curve inversion? Well, I've explained this many times before. I noticed in the previous video there was comments saying, what the heck is this? So I'll mention it again really quickly. Imagine this for a second. You want to buy a 30-year bond. That 30-year bond, you would think, would give you a pretty good return because you're taking a long risk. You don't know what's going to happen over the next 30 years. A 1-year bond should give you less return because that time is shorter. But what would happen if you actually get more of a return from the 1-year than the 30-year? Well, that would be kind of weird, wouldn't it? Well, that's what's happening right now. Okay, so that's all it is. Yield curve inversion. I hope that makes sense to you. I hope you appreciate when I get into those little tangents, but trying to explain things, trying to make it easy for you. If you do appreciate the information, hit that thumbs up button. That's all I'm asking. If you click that button, you're supporting the channel. And like I said, you don't want to make these kittens sad, do you? Every cat needs to smile once in a while. All right. That's all. I'll see you on the next one. Take care.